Welcome to Agoracom Small Cap Best of the Best. I'm George Cholos, founder of Agoracom, the Small Cap Epicenter. As you know, every week or every 10 days or so, we get together to talk about what's going on in the small cap space. First, from a macro point of view, US dollar, things like that, how it impacts the various factors inside the small cap space, then go on to make real specific stock picks to back it up. With me, as always, our chief market commentator, Alan Barry-Laboucan. Alan, say hello.
Hello, everybody. It's good to see everyone again. Yeah, it all depends on how our schedules are going. Sometimes it's more close to 10 days than a week, George. But
I'm getting better. I'm getting better.
You know, so far this year, I think I was calculating it. We've given about 20 picks or so. So we've covered a lot of companies, and we've got a few more for you today.
All right, so I'm going to do a screen share here so everyone can see what's going on. We've got, and this is something everyone's going to see a lot more of here. So this is going to be our picks in 2015. So here, Alan's picks. I got to fill in the purchase prices on these days, but you can see them. He's got 3 more that he's going to be making today.
Okay, so while you've got that up there, George, I just want everybody to be clear. I've kind of changed things in the last few months about how I'm going about making picks. It was becoming a bit of a nightmare to try to keep track of everything. So what I've done now is I've got what I call my portfolio picks. Those are the companies that we've talked about in the last few shows. George has a list of them there. And what my call is that I've been very bullish. I continue to be very bullish on oil and gas. Our oil and gas, as well as gold stocks and other commodity stocks. And so what I see happening is we've been under a lot of pressure for the last few years. And I think now we're coming into a trend where we're going to have higher highs and higher lows. I think that the pullbacks are going to be fairly modest. And so when you get pullbacks in the price of oil or gold, that's when you want to be looking at this portfolio picks. Because my attitude is I think that you can be buying the dips here and selling into the rallies, building up cash, and trying to increase your portfolio, because I think we're into one of those trends where, you know, it goes from the bottom left of the screen to the top right. Along the way, it'll have some ups and downs. I want to be buying those dips and selling into those upticks, building up cash when I've got profits, and so that I can take advantage of the dips. And so those are the list that George showed you already. That's what I call my portfolio picks. Until I take a company out of there, I think that you can use that list for this specific strategy that I'm talking about.
All right, and every week when a stock hits either a sell target or buy target, we'll be adding that. So it'll be a running total that always keeps it in there.
And or if I take a company out, I'll tell the audience when I've taken them out and what my call is at that point in time.
All right. So let's get to a couple of themes. So I've got 2 themes I want to talk about. Alan's got 3 stocks, and we also got the Canadian dollar to talk about. Something big has happened in something big's happened in the TSX Venture Exchange.
Now, to put it into context, George has been talking lately about a melt up in the venture kind of companies, the smaller companies. Now, I think that you're right, George. I specifically think that you're right. If you could just put a basket of quality compared to the overall index, I think you'd be even more right. So take, for example, if you take that group of companies that I've picked, I think that your melt up call in those kind of companies will be a lot more significant than the index in general.
Sure,
but I think you had some important things you wanted to talk about regarding that index.
And so right here, March 11th was the exact date. I called, we're going to see a market melt up. Okay, so look what's happened to the venture in the last year. This is what's happened to the venture right here in the last 4 years. Absolutely devastating, destroyed. We don't have to go through that. So on March 11th, I called a market meltdown for a couple of reasons. One, the zombies are out there. We know who they are. Even though they're walking dead, they're dead. Alan was the guy who first came up with this whole concept a couple of years ago. Tony Simon quantified it in a recent expose that he put out that's been covered by
Well, other people had,
articles.
there was some talk about these Walking Dead kind of companies, but what I put it into context, George, is we talked about how I was putting companies into buckets. One was, are they a zombie company? Are they a dormant company? Or are they a leader? And
Yeah.
What
but zombies, we're just making sure that, you know, you were making sure that people know, and that's how we started the show a couple of years ago, where we said the zombies are dead. So, you know, we've known it, but people were kind of holding on. There was a mourning period there where people, you know, weren't sure, and they kind of stuck with their losers, and and then when the losers finally died, they were in the mourning phase. And what I said on March 11th was, we all know who the zombies are. Even though they're walking dead, they're dead. Two, statistics on Agoracom showed quite clearly that investors, even as the exchange, even as the index was crashing, were spending more time on the site, more time per visit, which told me they're in the research phase, when you should expect the complete opposite. You should see traffic just dropping. Three, the remaining companies, the survivors, were lean, mean, and cheap. And we saw that the PDAC, all of a sudden this year, there was more deal making going on. There's more enthusiasm for getting real business done as opposed to survivor deals.
I can attest to that. I had a couple of deals. I got things done there.
And then the last thing was, I'm loving the great diversity coming into the TSX venture, into the venture. And again, not to leave out the CSE, but they just started their index, so it's hard to really put that into any kind of context until it's got some track record behind it. So it's the venture index, but we've seen this great diversity in terms of.
So now, George,
hold on, Al. Tech companies, biopharma companies, medical equipment companies, and all of them have real products, real customers, real business plans. There aren't these shots in the dark because Al and I want to go drill my backyard. We think we got something back there and raise some money for a stock promote. You put all those together, and I went, and you can go back and watch my video on March 11th, at the 1 minute 50-second mark, and said, we're going to see a market melt up. It's going to, now take a look at this, Alan.
No, George, hold on a second. I'll pat you on the back. You did a great job. I want to know.
It's still early.
I want to know your thesis. I don't want to hear about the why do you think it's going to, what does that mean to you, a melt up, and why do you think that's going to happen specifically?
Well, I just outlined 5 very specific reasons. So all of that I can summarize in this: the surviving companies are really strong because they had to get lean and mean. They've gotten rid of assets that are no longer useful to them. They've only kept the good stuff. And most importantly, they're super cheap because they were still babies thrown out with the bathwater. So you have this combination now.
So it's mainly a dramatically oversold asset kind of a scenario. Is that what you're saying?
Especially the resources space, dramatically oversold. That's why I said that the tech, biopharma, and the medical stuff and the medical companies were going to help lead us out of this. But the biggest gains, my quote unquote, said the biggest gains are going to come from the surviving resource companies. A lot of these guys out have market caps of $1 million, $2 million, $3 million. It's insane. What's happening there.
Have more multiples of cash relative to their market cap.
So take a look at this. So I made this call right back here. Okay, so you can see that it was around the 650-ish range, give or take. Now, we haven't had a monster move. It's been a nice move. Hey, 50 points on 650. That's a great move in just over a month. I'll take that all day long in the bank if you can get that. That's what, 9%, 8.5%. Very happy with that.
Compounded annually, you're looking at exceptional returns. So
yeah, if you annualize that number, if you annualize that, we're looking at 100% gain, right? And I won't be surprised. Now, people at home might be saying, well, George, come on here. Putting the crosshairs there, it's gotten there before, it kind of got there here. Are we really seeing anything different, or is just another bounce in this range? True, valid question. Here's what's different, folks. The green line here, the green line is the 200-day moving average. The venture index hasn't been over its 200-day moving average since the last trading day of August 2014, where things were great and then everything collapsed. So even though we've had some bounces, bounce, none of them were able to, even though we're getting higher highs, Alan's favorite pattern, higher highs, none of them came close to passing the 50-day moving average until here. But the 200-day moving average, I find to be the most important of all these moving averages, was never touched until right here. Thursday, April the 9th, Friday, April the 10th, in here, we've gone up over the 200-day moving average. Now, it's still not a breakout yet. I'd like to see it really clear this space from the recent moves to this level. So if we could see it get to 725, at that point, I'm calling it a full-blown breakout. But so far, 8.5% move plus breaking the 200-day moving average. Very, very, very big. That's very, very big from a technical point of view.
You know, again, George, I put it into context because I think that what's going to happen with your melt up scenario is that the index is going to continue to be pulled down because of the losers, the zeros in there. Okay, anytime you have to average something out and you got a bunch of zeros, it's going to pull your average down dramatically.
But they're already at zero. They're already at zero. In other words, they can't do any more. They can't. There's still a weight, but they can't do any more damage because they're all at zero.
That's a valid point. Sure. But I think what's even more important to your call, George, is that in about 6 months, we're going to be able to look back, and we're going to be able to look back at the index, and we're also going to be able to look back at the various different picks that I made. And I think you'll look a lot more correct in the picks that I made than the index itself.
Yeah, and I'm going to make picks to go along with it. Don't get me wrong. I'm going to make picks to go along with it. But I was just making a general call about in other words, what I want to signal to investors was, you can come back. Start doing your research, list the guys like us, get your leads. It's still early in the game.
Yep.
Really early in the game. I want to get this confirmation. I want to wait for that breakout. Then I'll start making some really significant picks at that point as the stuff I think that's going to fly. So I'll leave it at that. So
good. Well, while you're waiting around, I've had some pretty big winners in there. So I'll just keep doing what I do.
No, of course. Listen, that's good for you. Listen, you jumped on it earlier, right? And we'll get it. As soon as we film next week, we'll be able to show everybody some of the. I know Penn West was a monster winner, for example.
Your thesis is more of a general thesis right now, George, on the whole index. I have gone with a strategy that's somewhat different than that, but it will be positively affected by what you're talking about.
Yeah, of course.
All my eggs are in right now as far as a bet against the US dollar. I've been banging the table for a long time now about how overpriced the US dollar is, and that I wanted to be heavy into oil and gas as well as gold. And that's why I picked the picks the way that I have, because I'm very bearish on the US dollar and have been sort of for a few months now.
All right, so we'll get to that thesis in a second. So the second and last thing I want to talk about was, here you see MedMar, okay? Sometime last 3 months, 4 months, I mentioned a couple of times that medical marijuana was going to have a big year in 2015. Just like the dot-com bubble burst, the first time around, dot-com bubble burst. And back then, I'm on record as saying the dot-com bubble may have burst, but the second wave, which ended up being called Web 2.0, is going to be bigger than anything we've seen.
And so we've kind of seen that with the medical marijuana. There was about a year and a half ago. Then
too many companies jumped in. Suddenly, Alan was doing, George was doing something. Everyone was trying to get what we call press release promotion. You know, Alan would say something in the medical marijuana business. George would say in the medical marijuana, just trying to get spikes in our share prices. And then too much of that happened, too much dilution, everyone took a big of a hit. Plus, there were some stock halts because there were some companies out there that the SEC halted from trading and so on and so forth. So that put a bit of a damper on things. There was an injunction in Canada regarding a major ruling, so we won't go into all that. But so that kind of put a damper on everything. everything came back and got hit really hard. Same thing is happening. The deadbeats are gone. The survivors are stronger, and there are new entrants that are better. So two things are now happening. So that's, sorry, three things happen. That's one. Two, the movement in the United States is increasingly accelerating towards legalization. Legalization, we're not talking about medical marijuana, but legalization of recreational marijuana.
By the way, George, politicians are greedy. And so once they start seeing the numbers that are coming off of places like Colorado, they'll jump.
Well, I made that was part of my thesis a few months ago, where I said the money is going to be too good to give up for these guys. Hey, you get to increase revenues while you're decreasing crime. So you're decreasing your expenses having to keep up with all the illegal growers and all the black market stuff and all the gang shootings and all of that. It's a no-brainer. So guys, hold on.
Unfortunately, George, the Americans seem to have a propensity to like to put minorities in jails, just like Canadians do. You know, we like to put our First Nations and other minorities in jail a lot, and so do the Americans. So I don't know if there's any desire to change the. I think they still want to throw people who have,
money conquers all, Alan. Money conquers all. And I know this is a very sensitive subject for you. And I'm going to tell you the good news is for your people, for all minorities, money conquers all. And right now, there's more money to be made from lobbyists and campaign donors who are making big money on the marijuana side than there is to continue to beat on. I mean, and listen, I share your vision, because what did I post? So we're getting off on a tangent. I want to get right back, but give me 10 seconds here. What I posted on Twitter a couple of days ago, when that white guy in a gyrocopter, what do they call it? Gyroscope? Gyrocopter? Landed on the front lawn of the Capitol building, and he was nicely, so this is the tightest airspace in all of the world. He penetrated that, landed on the Capitol building lawn, and white guy gets escorted off the premises really nicely with a couple of security guards. So what I posted was, all right, so white guys landing on the Capitol lawn in gyroscopes and escorted off, but minorities running away on broken taillights get smoked. Yeah. So I know that, I feel that pain, but this is, no matter what, this is going to be.
I think your greed argument is a lot better than trying to make a horrible situation with the prison systems in the United States and Canada better.
Great, but the dividend, there's a yield, there's an offshoot to this for the politicians, which is while we can make a ton more money, we can reduce the crime. So why? It's, in other words, they're going to go all in. Lastly, we are going to have a national election here in Canada in the fall. It's guaranteed, because it's time's up, and the limits mean that we got to have a vote. Justin Trudeau is going to make legalization of marijuana one of his platform issues. The Conservatives are already backpedaling and trying to decriminalize it. I don't know if that passed yet. I can't remember. But in other words, all systems are go for medical marijuana and all the marijuana business around the legalization of marijuana. You know, all the different, all the different products, right? So I'm going to have medical marijuana picks for you sometime in the next week or two, but that's a big thesis, and it's going to be a monster, and you're going to have to get on that in order to make some really great money.
You know what I still say, the sleeping tiger in that whole scenario, that everybody's all excited about medical marijuana. I think the real play is in industrial hemp. The products that can come out of industrial hemp. Yeah. For example, just look at paper, George. It's 4 to 1. You can get as much volume of material off of 1 acre of industrial hemp than you can off of 4 acres of forest. And that forest takes 30 years to grow. The hemp grows 2-3 times a year. Okay? That's just one product that would be changed dramatically, which is paper. There's 40,000 different uses of industrial hemp, and it's a remarkable thing, and it's hardly even used. I think there's tremendous amount of opportunity.
Agreed. Good point. Very good point. So we're going to be looking for those kind of companies in the future as well. So guys, I'm talking multi-year. We're talking not as big as the internet, but same ramp up and it's not gonna stop for the next 10 years. It's not going to stop. You're not gonna get as big market caps. So obviously, it's much more pervasive than
George,
medical marijuana, but it's gonna be big move.
That brings up an interesting question, George. I agree with you that there's a big business out there, but what I don't see is a lot of people with extensive experience in that, running a business like that, because it's been illegal for so long. This is an interesting story. Where is that expertise?
You don't know. This is the beauty. All those people, let me tell you something, without naming names in particulars, where do you think all these small cap companies are finding the talent from when they come along and say, we've got an expert grower working for us?
I agree. I know.
All the talent has come from the guys that have been underground for the last 15 years and know this stuff inside out.
No, I was getting to another level, the board level, George, because no matter what you do, whatever industry you're in, you need someone at the helm running that thing properly. Where is that expertise going to come from?
Well, listen, it's gonna be there's gonna be growing pains, but it's gonna be on the way up. Rising tide's gonna lift all of these boats, and they'll figure it out along the way. And yeah, there'll be some failures. You're right. There'll be some failures at the executive level that couldn't execute a business plan, but a lot of that's going to be covered up by the fact that this company's going to be moving. They're going to be raising money, and they're going to be able to go over a lot of their mistakes.
Well, I'll tell you what, George, I like your call a lot better now than I did in the past. I was very nervous. I hate chasing things. Now that these things have all been beaten to smithereens, now is when I usually get in there. So I like picking up the pieces.
All right, so let's go into some of you got 3 picks today.
Yes.
You got Painted Pony Petroleum. Let's go through that first. TSX stock, trades in stock symbol PPY. Give me the skinny there on Painted Petroleum as I bring up the chart here.
Yeah, okay. So with Painted Pony Petroleum, George, they're a company that I've been watching for about a year and a half now. They're in the oil business, and what I really like about this company is they've got a strong portfolio of projects that seem to be very well run. And I also if you look at that chart that you just picked up there, you're going to notice about 3-4 weeks ago it bottomed out. It's been getting a little bit stronger then. I'm not one like George. George would probably wait for a little bit more movement to the upside to confirm that this is broken off the bottom. I actually think that the bottom is now in, and as oil gets stronger, I think that this stock will go into a higher highs and higher lows kind of a trend that, again, fits into my scenario or my strategy of looking for dips and buying into the dips and selling into the upticks and sort of trading around a position and building up your positions, because I think that oil's got a lot higher to go, and gold, and someone like Painted Pony Petroleum, PPY is their symbol, I think will do very well.
Yep, and then I see here, look, it made that first move. And all first moves always get met with some selling, because you've got the traders here at the bottom, the guys I'll call the non-believers who picked it up cheap and want to take their money. So I wouldn't be surprised to see Painted Pony come back somewhere right in here, the 650, 660 range. That's what I would wait for. I like this level right here. I'd set an alert for that range, and then I would buy strong. That's because I agree with you. It looks good. I'll tell you what also looks good. Sorry, Alan, is the fact that it's broken over the 50-day moving average.
I was going to make a point there for you, George, that regarding that 200-day, earlier you said how important that is to you. Just look at what happened to this stock when it spiked up and tried to touch that 200-day, and it rolled over pretty quickly.
Yeah, here I got actually the 100-day. So sorry, it's on this chart here, it's the 100-day. But yeah,
sorry, okay.
Yeah, but no, same thing. 100, 200, they're almost the same, right? They're almost the same.
Did you just put what do you got on there? 100?
Yeah.
Okay. Again, it's a longer term thing, and look at how it got to that peak, hit the moving average, and then it's come off. But then it'll probably stabilize around the 50-week, and then I think it's up from there.
Yeah. The 50-day, you mean, and then that's what I think. 50 days around 685, so that's what I'm saying. 660 somewhere in there, 670. 650, somewhere in there, I think is going to be the pickup, and away you go.
All right.
Midway Gold, MDW, closed at 47
Well, let's
cents
do
today.
New Gold first, George, because these are kind
All
of
right.
big companies, and then I got a small one for everybody.
All
So
right.
let's
So,
do New Gold next.
so New Gold, NGD TSX, closed at $4.18. So this one hasn't had its jump yet. All right. Tell us about what's going on over at New Gold.
Well, there you can see on your chart, George, that it's kind of testing close to that last big low. And, you know, this is part of a play on the mining sector. Doesn't have a lot of companies in the mid-tier level. Back in 2003 through 2007, there was a lot of takeovers. Most of the mid-tiers are gone. There's a real dearth of mid-tier companies. And why I think that that's so important is we need those mid-tier companies. Those are the ones that used to be big takeover companies for the junior explorers that went out there and made a big discovery. So there's not enough companies in that space. And New Gold is ideally positioned to take advantage of that. They've got 3 mines in production right now. They got a pretty low cost of gold production. And they're aggressive. They've got a phenomenal management team. Most of the who's who in major mining circles are involved with this company. Pierre Lassonde is on the board. The chap that started Goldcorp is on the board. A bunch of guys. The ex-leader of Barrick is the president and CEO, Randall Oliphant. Lots of good people involved with this company. Lots of good production right now. They're making money right now. And I like their growth prospects because of this lack of companies in that mid-tier level. So it's a play on gold moving up. It's a play on phenomenal opportunities for a mid-tier company, and having the team involved there. They can definitely do something with that. They can raise money whenever they need it.
Yeah, I see as a buy. I just took a look at some quick technicals without getting too much detail here. And it's definitely at the low end. You know, making a buy here is fine, and I would set this as my stop loss, and I doubt it'll get there, but just in case, I would set, you know, 385. So let's say 380. I would set as my stop loss. But we can
tell people why you're using that, George. It was the last major low, right?
Yeah, just because it's extraordinary, out of the ordinary. So you could leave that, but otherwise, based on what I'm seeing on the technical side, this is a really good risk reward here play in the 415, 420, 425 range. I would call it a 2-month buy. You know, a 2 to 3 month buy. I think you're looking pretty good.
Good deal.
And last one up is, or next one up is Midway Gold, MDW. Trades on the TSX, also closed at 47 cents today. Here's the 1-year chart as you're looking at it. Tell us about what happened here, Alan. This is you know, right at PDAC time. It was, I mean, up until this point, it was looking pretty good. You know, pretty stable, tight range, and kablam. So what happened here that took it down 60%?
George, that's what you call growing pains when you transition from being an explorer into a gold producer. And sometimes you have these short-term scenarios, you know, a couple of months where they're going through, maybe they have a slight delay or they're slightly over budget or things like that. In the grand scheme of things, it's just a blip in the long term. Why I like Midway Gold so much is they are a new gold producer. The project that they're producing is in Nevada. It's now producing, so they don't have to worry about all those building costs. They are going through some of the growing pains to get everything working properly. Ultimately, where they end up after they get all these growing pains out of the way, George, is they will be a very low-cost producer. One of the lowest cost producers of the new gold mining companies that are just starting out in the last, let's say, 6 months to a year. They are one of the lowest cost producers. And so I really like that scenario. And now you've had a stock that's been beaten up lately. And another reason why I like that, so it's a turnaround play on the new production kind of scenario. It's get stronger as gold gets stronger type play. And then it's also a play on, this company has a good looking future, and right now they're not getting, your shareholders are not getting rewarded for that. I think that there's a lot of upside because of those various different scenarios, George.
All right, from a trading point of view, I took a look at the technicals while you were talking. It's looking weak short term to me. I think you can be patient here and pick it up somewhere between 40 and 43. It closed at 47. So if you want to get, I think you can get a better price. And again, this goes to the trading style of Alan and I. If Alan's going to buy this and hold it for the next 2 years, and he doesn't care about 3 or 4 cents either way. Me as a trader, I want to give myself every advantage possible. I only want to buy when the odds are heavily stacked in my favor. I'd wait for, and I think it can get there. I think it'll get to 42, 43 for sure in the next week by the next time we do the show. So you can afford to be patient.
Yeah, and that's a distinction that I think is worth making. When George is sort of, let's say, being the devil's advocate on my picks, because he's looking at a much shorter scenario. My strategy, and I want to stress this again, is that I think gold and oil are going up. I want to be buying in the dips, selling into the upticks, trading around a position so that I can maximize my gains down the road. That's a much different scenario or strategy than what George looks at.
No, and I'm back here. By the way, if my screen looks darker, it's because I'm on the East Coast and the sun is setting here. So the light that I had illuminating me from the window is vanishing. Either that, or it means that Google Hangouts is picking me up as the weaker of the weaker commentator and is slowly phasing me out. Let's talk about, you and I have been back.
Those guys at Google are pretty sharp.
Man, those algorithms are working overtime. So you and I have been talking about the U.S. dollar weakness. The strength of the U.S. dollar, how we think it's going to turn, and that's the U.S. dollar index against all major currencies. So we've agreed on that. And by the way, we don't do a lot of love in for everyone that's new to the show, but
actually, George, I think that our most disagreements are usually on the big stuff, like the market, the overall.
Yeah, you're right.
Market, but we have been coming together. I've been banging the drum for a few months now, saying that I thought that the U.S. dollar was very dramatically overbought. And we've been pounding that table that the U.S. dollar is overdone. I've been saying that lately, that I think that now in the last 3-4 weeks that the trend is broken and that we will have more downside. And you wanted to mention something about the Canadian dollar, George.
And to your credit, by the way, one thing, and I posted this on Twitter, you saw this 2 or 3 times, you were banging the table on how that might give problems to the major indexes, which haven't shown up yet. But a lot of companies did warn that their earnings weren't going to come in as expected.
Actually, you took a snapshot of
CNBC. Yeah, right. I took a snapshot.
It said something like the experts they're actually starting to say what I've been saying for about 2.5 months.
And you did make the call. You did make it. You said a lot of these companies that count on exports are going to feel the pain.
No, the ones that are doing business outside the U.S. those are the ones that let's say they make their money in London, England. They're based in England. Then they got to bring that money back to the U.S. to report that on their quarterly earnings. That's where it's not coming back as strong. And so now these companies are going into a really tough scenario with the earnings.
No, hold on. It's the opposite, Alan, because if I'm making money in euros all this last quarter, and the euro keeps falling, when I actually bring it back, oh, you're right, because I'm bringing it back and the euros are buying less US dollars. They're converting into less US dollars.
So then when you
right. So my mistake. Yeah, that's right.
When you report that, it looks like you're not doing as well. It's just a currency situation, but nonetheless, that is a catalyst to a correction, I think, because right now you've got that big cap market trading at about 18 times earnings, and you've got earnings growing at less than 10%. That's a very rich market. And if you have an earnings recession because of the powerful strength in the US dollar, then I think you've got a scenario where you want to be defensive on big cap stocks. I don't think you have to be super bearish, but I just think there's better places to put your money right now.
and a big move. So, you know, Alan talked about the U.S. We were both talking about the U.S. dollar index. I was hitting the table even harder on the Canadian dollar specifically versus the U.S. dollar, and it went through this epic battle that I would post on Twitter all the time in this, you know, 79 cents, 78, 79 and a half cent range. I kept on saying epic battle, and finally, look at that beautiful breakout here. Went as high as 82.50. I mean, that's a monster move, 79.50 or so to 82.50 in a matter of a month. You know, that's
George,
300 basis points. That's big in the on the currency side.
put your oil chart up there and see what the correlation.
Let me get there. Hold on 1 second.
And while you're doing that, George, I agree with you. I like the Canadian dollar a lot. As I've been bearish on the US dollar, I've been saying that I like the Canadian dollar. I like the Aussie dollar. One of my favorite dollars right now, George, is the New Zealand dollar against the US dollar. That's one of my favorite currency.
But how do you play that unless there's an ETF? You're going to have to give people an ETF. It could be your favorite, but how do you play it?
There's a swap. New Zealand dollar against the US dollar.
How do you do that? I don't know how to do that. What do you do?
You go in the futures market or the options market and you buy New Zealand dollars over US dollars.
Come on, man. I'm looking for ETFs. I'm looking for an ETF that plays that exact trade right there. But, you know, okay, well, let's see if you can find one. That would be great if you can find one.
You and your damn ETFs. You
Well,
want
it
to
makes it easier for everyone at home because not everyone at home's got a currency.
what am I going to do? If someone's trading currencies, they'll know how to trade.
Oh yeah, that's for sure. And here, by the way, can you see do you see the oil chart here?
Yeah, I do.
All right, so there's your oil chart. Here's where we're back on April 10th. Okay, April, you know, $50 back on April 2nd.
And what was the Canadian buck then?
Oh, I couldn't. I
just got it up there. April 2nd. Look at that date.
Let me open up a new tab here. Hourly, April 2nd. You're talking about 79 cents.
So, you know, as oil's gotten stronger, look at what's happened to the Canadian dollar.
Oh yeah, of course, because now you got to spend you got to buy more dollars to buy that barrel of Canadian oil. So that means that you're buying more Canadian. There's more demand for the Canadian dollar. No, I'm pretty sure.
No. What I'm saying is that the Canadian dollar is a petrocurrency.
Sure. And
as the oil was getting beaten down, so was the Canadian dollar. It doesn't matter what the fundamentals are of the Canadian economy. When the price of oil is getting beaten on, the Canadian dollar is going to get beaten on. Now, at the same time that was happening, all the other currencies were getting beaten down as well. So you had two big pressures on the Canadian dollar, and now those pressures are alleviating. And I think
let's end it off with this. Where's the U.S. dollar going? Where's the U.S. dollar going from here? Let me bring up the.
Well, you bring up your index there, and I think that it could give back as much as 50% of the gain from the lows that were hit around April, May time last year.
So you're talking about close to 25% move
from that
from 80 to 198. So you're thinking that we get right back here. You're thinking we get to the 90s. He gives back half of that gain. So half that gain.
There's two. You can see two levels there that are important, George. One's at the 95 cent. It breaks through there, and then it's going to hit the next level, which is at 80 cents or 90 cents.
All right. Well, let's see if that happens. That's for sure. It requires a lot of work to get there, but it's definitely topping.
In that scenario, the biggest winners will be Canadian dollar, Aussie dollar, and New Zealand dollar.
All right. Well, I'm going to make life easy and just do the Canadian dollar. That'll be easiest for me.
All right. You never asked me why I like the New Zealand dollar so much.
Increased demand for sheep in Vancouver.
No, sheep in Toronto, Richmond Hill, or wherever the hell you live. No. They are also a resource-based exporter nation, and they're expecting balanced budgets this year, George. who in the industrialized world can say that these days?
All right. We'll end it off on that note then. Maybe Canada, but so far so good. So I'll make sure I have more picks for you next week. I'll make sure Alan's picks are all filled in. We got the dates, we got the stock, we got the dates and the stock picks. So now I just got to throw the prices in there, and then and we'll see what the performance is. But I think the next, short of any macro event taking place, which always worries me, and that's probably a good thing for bulls, because if we're sitting here saying, no, the world looks good, everything looks great, then that's when you worry. You know, China's got some concerns, Europe's got some concerns, so it's probably good that we're kind of not, you know, all the way in.
I hate it when everybody agrees with me, George.
Well, on that note, before we officially fade to black on my end, we'll end the show. Alan, thanks for joining us. Everyone at home, hope you enjoyed watching it. You learned some things. As always, I'll give you our disclaimer. None of what we say here is investment advice. Okay, Alan and I are not investment advisors. Our job, we're the canaries in the coal mine. Point you in the right direction. Tell you what we're seeing. It's your job then to go do your own due diligence, talk to your financial advisor. Your risk tolerance may be significantly different from ours. You may not be a trader like me. You may not be a long-term holder like Alan. And anytime we have any kind of conflicts here in terms of either clients or stocks we own in our portfolio, we'll make sure we'll let you know. But I didn't have any conflicts because I didn't have any stock picks. Alan, do you have any conflicts there?
No conflicts. These days, George, I've been putting most of my money into the deals that I'm working on I'm with. And because I know what's going on there a lot closer. But these are companies that I like a lot, and I think you'll do very well with them.
All right. So thanks, everyone. Hope you enjoyed the show. Have a great day. Talk to you soon.
You betcha, everybody. Thanks a lot for joining us today. You did the disclosure. Make sure and talk to your your advisors and your wife and husband. We don't want anybody getting in trouble out there.
I think they're already in trouble if they have both a wife and a husband.
No, your wife or your husband.
Yeah.
You lawyers, you got to keep track of those little words. They make
I can't go to jail because you messed up the disclaimer. I'm not going to do that.
Okay, me and George don't want to go to jail, so you make sure to talk to your financial advisors, your spouses, do your homework, the whole works. Have a great day. We'll talk to you soon.
Bye.